Data today showed that the U.S. trade deficit widened in April after falling to a 3-month low. Now, we also are going to see that ADP employment report on Wednesday, as well as the jobs report on Friday. Joining me today to talk about this is Jonathan Corpina from Meridian Equity Partners. So, Jonathan, we did see the trade deficit today widen. How much of a problem is that when you do have consumers spending more on foreign goods that U.S. companies are taking in from overseas sales?
Clearly that's an issue that has been in focus for a long time. And as our economy has gone through the shifting that we've seen over the last 4 or 5 years, bringing jobs back home, building products here, spending money here has been of utmost importance. So when we start to see the money being spent on foreign goods rise to certain levels where it does become alarming, we have to make sure that it's something that clearly stays in focus here. But this is something that's been an issue for a long time now. And it's not just products. We're talking about energy, resources, oil, other resources that are there where Americans are spending their money, where we try to bring it back within our borders.
Now, we have seen the market rally as central banks continue to pump liquidity into the markets. Is this why we continue to see the markets rally, but then we see this disconnect within the economy?
So the economy is moving at a slower pace than I think everybody wants to. And we know that the government is pumping money into our system here. It's a very fine balance between the two, trying to get to a point where the government can pull back the reins a little bit to see if the economy can stabilize itself on its own. We've had some comments come out of Washington that have rattled our markets over the last 2-3 weeks as concerning of when is this pullback going to occur and what are the effects going to be on the market. I think it's just still a little premature to have these conversations. I think our market is still a little fragile compared to what it needs to be when that pulling out of infusion of capital into our markets continues. So the market will continue to get better. Our economic data will show that we're getting better, but we still have our training wheels on, so to speak. So it's going to be a very fragile, delicate situation of trying to pull back of government interaction in our economy and seeing if companies in our economy can stand on its own.
And finally, we are going to see that ADP report on Wednesday and then the jobs report on Friday. Is bad news somehow good news, because then the Fed is going to pump the brakes and it's going to continue that QE program?
Right. It depends how bad the bad news is. You've got two camps here. One camp is saying we need to stop printing money, we need to stop infusing this into our system, and we need to see, are we okay on our own? The other camp is, well, the numbers aren't as strong as they should be, and we want them to get better, and we still need this infusion coming in. So if the numbers come out bad later on this week, I think this is going to give the Fed a little bit more ammunition to hold on to say, you know what, we're not just ready yet. Let's just slow things down and see where we're going to be in the next month, 2, or maybe even 3 quarters. But if the numbers come out good, we're going to have the skeptics saying, see, we're fine. We don't need this capital infusion that we've been seeing all along. Let's start to move this up. So all this data mixed together just comes down to the next time the Fed speaks, everyone once again is going to be dissecting every single word that they say to see, is there a clue there? Is there some sort of light at the end of the tunnel? Is there some sort of indication that's going to show us when this pullback is going to occur?